Welcome to another episode of Phillip Trading Podcast. My name is William, and our speaker today we have Trent here, which is our Senior Marketing and Billing Executive at Phillip Futures. So today we are going to talk something very interesting, which is short selling. So many investors, they actually heard of this short sell a stock before, but how does it actually work? And with currently the US indexes such as S&P 500 and Dow Jones is currently weakening, investors might want to explore trading opportunities in short selling, especially on US stocks. Okay, so if you are currently watching this podcast, please share this section on your Facebook with your friends. Okay, you can also comment in the comment box below to ask us any questions. Okay, so Trent, how are you today?
Yeah, I'm feeling good today.
Yeah, good,
How are
good.
you?
Yeah, good as well. Good to hear that. Okay, so to start off our topic today, can you please explain to us what does it mean by short selling US stocks and what tools can investors use to short sell?
Okay, so short selling is actually an investment or trading strategy that speculates on the decline of a stock's price. So traders may use short selling as speculation, and investors may use it as a hedge against the downside risk of the long position in the same stock or related one. In short selling, a position is opened by borrowing the shares of a stock that the investor believes will decrease in value. The investor then sells these borrowed shares to buyers willing to pay the market price. Before the borrowed shares must be returned, the trader is betting that the price will continue to decline, then they can purchase them at a lower cost. Okay, so for our audience out there, you can actually do short selling on US stocks with Phillip Futures US Share CFD. Some of the stocks we offer for short selling include Apple, Microsoft, Amazon, Alphabet, Tesla, Facebook, and many other US companies. So if you're interested, you can visit our website at www.phillipfutures.com.my to check them out.
Okay, thank you. So for those that are listening to this podcast, you have heard it. Phillip US CFD, we allow our investors to earn money even when the stock prices drop. Okay, so next question here, Trent. So a lot of people, they actually have this concept that leverage trading of derivative products are actually very dangerous. Do you agree on this statement?
Well, in my opinion, right, leverage trading is not dangerous at all if you understand the derivatives product and manage your risk wisely. Okay, one of the common mistakes by new investor is that they over leverage by using all the capital they have in their account to enter into many positions. So with no extra capital for buffer, investor may easily enter into margin call situation and are required to add in additional funds to maintain their position. So as a rule of thumb, to be safe, investor advised to enter into the number of positions based on risking only 5 to 10% of their capital per trade. Okay, so with just risking 5% of the overall capital, investor can lose up to 10 times consecutively before wiping out the entire capital.
Okay. I totally agree with you on this actually. So as long as you don't abuse the power of leverage, you could really benefit from leverage trading actually. Yeah. So since our topic today is about short selling, do you think it is actually risky to short? Because US market and all those big stocks, they are seems like it's always on an uptrend.
There's always risk involved in all type of investment, and it's our duty as investor to manage and minimize the risk involved. I suggest that if investors are planning to short sell US stock, there are two ways on stock selection to reduce this risk. First method, you can select stocks with high PE valuation as compared to the sector average. Stocks with high valuation tends to revert to the sector average over time. Then the second method, investor can select stocks that have developed a steady downtrend. This stock usually had announced a poor financial result and which may be associated with a change in its fundamentals or the industry landscape. Overall, it is essential for investors to identify the catalysts that would trigger the sell now of a stock.
Okay. Understood. So last question. What are the stocks that you reckon are actually good to short in the current market, or which sector in particular?
Okay, there are actually a few sectors in the US stock market that are currently undergoing correction. One of them is the healthcare sector, in which the vaccine-related stocks such as Johnson & Johnson, Pfizer, and AstraZeneca are currently on a major correction. The reason for the correction is mainly due to the rapid rise in share price previously, causing an overvaluation with earnings lagging behind consensus expectations. Another potential sector to do short selling is the telecom service sector, which is currently experiencing stagnant growth in US and steep price competitions among other companies. Some of the stocks under this sector that are currently in a downtrend are Verizon, AT&T, T-Mobile, and Zoom Video.
Okay. Thanks for your sharing today, Trent. Yeah. Seems like Zoom Video, they have been in the news for quite some time. Since due to earning catalyst, like you said in your previous question. Okay. So yeah, thank you for your sharing. So once again, if you are interested to find out how you can participate to trade the US CFD, feel free to drop us a message via Facebook, and our representative will contact you the soonest possible. Okay, so Phillip CFD, we allow our investors to actually profit from both the bull and bear market. Okay, and thank you, Trent, and see you again next time.
Thank you. Bye-bye. See you next week.
Yeah, bye-bye.